Hi everyone. I hope you all had a nice lunch. So my name is Ron. Once again, I'm from the FSMOne Investment Advisory Team. So a little bit about what we do at FSMOne Investment Advisory Team. Of course, if you are a new investor to us, you can look for us for some portfolio recommendations, how to craft your own portfolio. And also, if you're a current investor, you can look us up for market updates, portfolio reviews every once in a while. Then, of course, seasoned investors can also make use of us to just bounce off, investment ideas or some of your investment views. So we're a team of 4 of us. We are non-commission based. So we work on reverse inquiry. So basically, if you are looking at those kind of traditional brokers, we don't do that. We don't call you every day to tell you, what you can buy, what you should sell. Yeah. So maybe just after lunch we can have a little bit of exercise. So, but don't worry, not going to ask you to stand up and massage the person next to you. So just raise of hands lah. The next question. Yeah. So Straits Times Index. Anyone think that it will break 3,400 barrier in 2024? Okay. A lot of hands. Not bad. How many are quite negative? Don't think it will happen. Also have a fun. Okay, so and the rest I take it you're not sure. So basically, why I want to ask this question is because no matter how much effort you put into studying the fundamentals, you can't predict the markets down to the very granular details. So that is why we advise clients to avoid market timing. So market timing basically requires constant market monitoring. So even if you spend every minute of your free time monitoring the markets, there's no guarantee that you'll get it right all the time. And we feel that because of that, the effort does not equate to the results. And we always strive for a globally diversified portfolio. That means like a little bit of exposure into US, Japan, Korea, all these favorable markets. Then, of course, because of that, you have more than one market to monitor. So this chart, you can see that if you're going to monitor the market, this is what you're going to do. From around 9 in the morning, major markets in Asia, Singapore and Hong Kong, they would start. Then they will trade all the way lunchtime, stop a bit. Then 5 p.m. market close. But before market close, London at 4 p.m. already start to open. Then they will trade all the way until 12:30 a.m. And US, before London closes at 10:30 p.m. roughly, depending on daylight saving, they also start all the way until 5 a.m. So you only stop at 5 a.m. basically. And from 5 a.m. till 9 a.m., congratulations, you have 4 hours of free time. You get maybe 1 hour Netflix, 2 hours of sleep, and 1 hour of breakfast before you start all over again. Okay? So because when you are investing, there are already a lot of variables to consider. What fund, what ETF is suitable for your risk appetite, what asset class, the expense ratio, and also what index to follow. So we want one less variable to consider, basically. So, and I'm sure many of you have heard before, time in the market beats timing the market. And so timing the market can be a vicious cycle, basically. If you not only have the time to enter, you have the time to exit. So enter, exit, enter, exit, enter, exit can be a vicious cycle, and it can be disastrous if you just get one exit or one entry wrong. And it's not every day that there will be like obvious market signals like COVID or rate hikes, rate cuts, or that to get the market timing right. And maybe we'll start with why we prefer ETFs to start your investments. Because mainly it's a diversified portfolio, a basket of securities. It's traded like stocks on the exchange, which means that the prices, all that are transparent. And it's also passively managed. That means you don't have to pay any extra management fees. So lower resources are allocated into research to find, for the fund managers, basically to find undervalued assets to invest into. And also the risk is limited to that of the index. Okay, and why RSP works? So once again, it helps you to avoid market timing, like I mentioned earlier, and also dollar cost averaging it helps to buy more when it's cheaper. So that when there's market downturns, actually RSP is the best way to invest because you buy more during when it's cheaper. And then for young investors, maybe you just saved up $10,000 and you are trying to invest in the market. The good news is you don't have to just dump all the $10,000 into the market all at once. You get to keep your lump sum, and while you still invest, a few $100s or a few $1,000s bit by bit every month or every week. And also, if you don't have a lump sum to invest, you also can use RSP as sort of like a diligent savings method. Okay, so if let's say we use the STI once again. So the Spider Straits Times Index, ES3, I'm sure a lot of you are familiar with this. If a lump sum investor and RSP investor started at the same time last year, May 2023, okay? If they bought in at the same time in a lump sum versus the RSP investor who bought in on a monthly basis, this is the results you get. You can see the RSP at the end as of last week, or rather just a few days ago, the RSP investor actually made almost double that of the lump sum investor. So never underestimate the power of dollar cost averaging. Okay, and why RSP works better with FSMOne? Okay, I'm sure a lot of you know that we have one of the lowest subscription fee at 0.08% per transaction, or rather per subscription, and minimum is only $1 US dollar or Sing dollar or $5 H Hong Kong dollar. And from now until end of the year, we are running the 0% subscription fee promotion. And you can buy in up to 4 times a month, and each time we also don't charge the subscription fee at all until end of the year. So the 0% promotion is applicable to all 4 times if you choose to buy on a weekly basis. Then we also have over 170 ETFs to choose from. Anytime that you feel that we don't have something that you like, you can always feel free to reach out to us. Our research team and the stocks team or the ETF team will take into consideration to add certain ETFs into the RSP list. And of course, you can start from as low as $50. So if $50, you have $200 to invest on a monthly basis, you can 50 on a weekly basis. So you get to buy more over a period of time, in 1 month. And there's also no lock-in period. That means you can stop the RSP, you can keep it there, or you just want to sell it, also can. You want to withdraw it, also can. So no lock-in period at all. Okay, the next few slides may be a bit boring for the seasoned investors because as a financial advisor, we need to advocate certain form of risk management when it comes to constructing your portfolio. So actually, we get a lot of questions that when investors want to construct a portfolio, the first thing they think about is how much they want to make in a year. So on an annual basis, they want to make 8%, 10% per annum. Actually, another question you should ask yourself first is how much can I bear to lose? How much can I bear? How much drop in the portfolio will make me uncomfortable? Some people can be 10%, some people can be 50%. So that's a question you need to ask yourself. Okay, and how much you can invest? Like on a monthly basis, you need to work out your budget. And how can I stay invested? When do I need the money and why do I need the money? So all these will form part of your investment objectives. So very simple questions to ask yourself before you start investing. Okay. And portfolio construction, roughly if you're an aggressive investor, maybe 90% go into equities, 10% goes into stocks, then conservative is the other way around, 90% into bonds, 10% into equities. So then maybe let's say we focus today on balanced investors, for example, 50-50, okay? So within the broad asset class allocation, we suggest that you build a core portfolio first, consisting of both bonds and equities. So it gives you a foundation to generate steady performance. So the core portfolio will not require much monitoring or adjustment on a regular basis. Maybe just a once a year review will do. And after that, you can think about your supplementary portfolio. So supplementary portfolio will be maybe the sexy investments like semiconductors or Indian technology. Some of those maybe I'll share a little bit later. And the supplementary portfolio will add as a kicker to boost the returns. And it usually consists of a high conviction thematic trends, like what I mentioned earlier. So the supplementary portfolio allocation is recommended at below 20% of the total portfolio. And so total, in summary, adopting a core and supplementary portfolio, it helps to minimize the risk through diversification and also aim to achieve an above average return above average return with below average risk over the long run. Okay, these are some of the interesting ETFs that are popular among our investors. So if you're looking to just like start a core ETF portfolio, this is something you can consider. Maybe I'll just share a little bit from each column. Basically, iShares 20+ year Treasury Bond ETF, TLT. So this one invests in the Treasury bonds. So if you're not an accredited investor and you want to invest in US Treasury bonds, this is one ETF you can consider because US Treasuries are one of the safest investments in the world. Then under core equity, maybe I'll just point out Van Eck, Morningstar, White Mode ETF, and Schwab US Large Cap Growth ETF. So White Mode, this term, basically it represents some form of monopoly of a company within its sector. So for White Mode or the mode ETF mode, what they advocate in the portfolio is companies with a monopoly or a very significant advantage over its competitors in its sector. And also, of course, Schwab US Large Cap Growth, SGX. This is basically overweight in the Magnificent Seven, your Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla. So they have a lot of weightage in that. So when the Magnificent Seven performs, the SGX also performs rather well. Then under supplementary equity, of course, we are positive on semiconductors. So that's one you can add inside. And I think maybe the past two under core and core bonds and core equity, you already have a lot of US. So you might want to diversify away from the US. Something to consider, maybe Indian technology. So if you feel that, Indian technology. So the portfolio adoption in this, or rather the digital adoption in India is among the fastest globally. So this ETF, DGIN, it enables access to local companies, the Indian companies, across various sectors that are positioned to be India's digital leaders in India's digital future. Okay. Yes, so actually I don't have much more to share. What I have is our socials. If you like more investment ideas, feel free to follow our social media. Maybe I'll just leave this slide up here for a little while for more people to subscribe to our social media. We have Telegram, Facebook, IG, and YouTube, and of course our website itself. So basically, if you are looking for daily investment content, daily investment ideas, just follow all our channels. They come in very regularly. Okay. Yeah, so how to reach out to the FSMOne investment advisory team if you have any questions or any queries about our platform. This is the way to reach out to us. We have the hotline, you have the administrative matters, you can go to client help. Advisory will be more on investment matters. And of course, if you want to visit our office, we are open 8:30 to 5:45 on weekdays at 𝗫𝗀𝘀𝗁. Okay, with that, I'll end my presentation. My name is Ron, so thank you all for coming here today.